Hello.
Hey, good afternoon.
Good afternoon. Hard to believe it's Thursday already.
I know. I think we said that on Monday, but we'll blink and it'll be Thursday. And here it is. We blinked and it's Thursday.
It's amazing. Absolutely amazing. I was just clicking to log in and it's, oh, would you like to look at the Wednesday meeting or the Thursday? I'm like, Thursday? What? Man, so interesting day today, kind of unfolded the way we anticipated.
Right. It got a little higher in the morning. I thought we wanted it to close the gap, which it did. And then it gave us another dollar after that.
Yeah, so let's just give everybody a recap of how to get to what we're talking about. So go to tradingeducationblogs.com. You could either scroll down to get the most recent post there with our morning game plans, or you can click over here on the blog, and they're generally right there with the date as well. You'll be able to see them from today. So if we click over to what's going on in the market today, we will first get into what our forecast was for today, or as we put it very clearly, um, you should get in the habit of forecasting what you expect to have happen on the open so that you can be prepared for that first 90 minutes. I think a lot of traders wait to see, let the dust settle, and then they kind of pick a direction. But there's a lot of volatility. Well, actually, say traditionally, hasn't been that
Mhm.
way for the last month, but traditionally, there's a really good readable volatility if you're prepared for it with a expectation. And we're really going to tie this together, Marion, on one of the next slides, because I kind of laid it out exactly how we finish our pre-market meetings of what we expect. And I think everybody should really try and develop that skill. And the argument for that all the time is, well, if I call the market and it doesn't do what I expected to do, then what do I do? Well, that's fine because the market's not doing what you expected. You don't do anything. But what about when it does do what you expected it to do and you're prepared for all that volatility? That's really what you should be focused on. And that also applies to having a bigger list of stocks. Let's say you have 10 stocks and you're like, okay, these 7 I expect to go higher on the open, these 3 I expect to go down. If only 2 out of the 10 do exactly what you expected to, you're going to be prepared to make money quickly out of the gate. And look, we all know as traders, you make money out of the gate. That makes the rest of the day a lot easier to manage when you book some money earlier in the day.
Right, correct.
So today's September 3rd. Just a review of what we were looking at coming into today. This is the SPY heat map, the S&P 500. And you can see that for the most part, we were green across the board for most of the S&P 500, but it was a little bit deceiving in two different ways. Number one was there was a giant gap yesterday, or I should say a higher opening yesterday, that took us right into the previous day's resistance. So in that sense, everything was up, but for the most part, most stocks were sideways for the entire day. And then we had a kind of end of day push, which is kind of what we see here. So this is the price action we were looking at coming into pre-market today, looking at the game plan. So previous day, we had a big gap up. This is the previous day's high. Again, I keep saying gap. I did that mistake yesterday as well.
Mhm.
So anyway, this close is what pushed a lot of those stocks on this chart here to be green, even and green in a big way. And this is the daily chart, so you can see that we actually closed at the highs the previous day. So this was our call coming into today based on the heat map we just showed you and the daily chart. So as Marion had just said, we were looking for a strong close. Actually, we got a strong close, looking for a test of the previous day's low. That would have been the ideal scenario here if we would have pushed up, filled the gap. Actually, I'll pull that over there. Let me pull up the SPY, actually. We were looking for this close to get into that gap, which at that time was 197.01. So actually, Marion, you had mentioned there, it went a little higher than we expected. But the key was we had two scenarios for today's open based on the higher open. It was pre-market, we were a decent amount higher. So if we got a higher open and a push higher off of that, we were looking for a sell short. The first number here gets actually a little more specific. We were looking for a push higher into the previous day's low for the ideal sell short if we would have got a signal there. If we opened higher, which we did, and pushed lower off of the open, we felt that that was setting up a little bit better buy because then it would have been further away from the previous day's low, which would have set a pretty decent reward potential into the previous day's low. But if it opened higher and pushed into that level, the reward potential was a little bit lower. Now, we were setting that expectation based on assuming the previous day's low would be a resistance level to book a profit, and that would be the end of the move. But we did get the push higher, but as Marion had just said, we actually pushed a significant amount higher than that. So right around here was the 197. I think we came within 3 cents, and we got this topping tail doji type candle here that did not end up rolling over. As a matter of fact, if I'm not mistaken, we actually triggered a sell short there that got stopped out into a flat or a small loss, just to be fully disclosured there. But we ended up pushing higher and then finally starting to roll over. And if I'm not mistaken, this is 11 o'clock. I think that the VXX turned at that same time, Marion, if I'm not mistaken.
Right. Yep, it did. We started watching that, and that was getting a little stronger. Even remember early in the morning, we said, "Hey, look at watch the VXX and the UVXY."
So just a simple trend line break in the VXX is actually what triggered the market having the same thing on the opposite side. And as we said in yesterday's recap, you start to get 1 or 2 or 3 of these different signals piling on top of each other, telling you the same thing, where there's no disconnect. You can kind of raise your conviction level a little bit that in this case here, maybe now it's a time to start selling short. Or let's say you didn't want to sell short and you believe the market was strong, which is absolutely nothing wrong with that thesis at that particular point. Maybe you just move up your trailing stop. So let's say you might have been long overnight or long off the open. Let's say you bought the opening 10-minute breakout, whatever this. When that trend line broke in the VXX that we had just showed you there, you could have tightened up your trailing stop there when you got this doji and that trend line broke. So either way, if you wanted to sell short because of what was going on the daily chart, you had a reason to. If you only wanted to be long, nothing wrong with that either. You probably would have been looking to bid here to look for a retest midday, but didn't get it. So that was the scenario coming into the day. We had a pretty defined, we were getting a higher opening because we were higher all pre-market. It was just a question of what direction we pushed off the open to give you a trade. Now, I guess, Marion, it's smart for us to give a little context to why we said if we get a higher opening and a push higher, we were looking to sell short as opposed to looking to buy the push higher. So maybe we'll pull that up on the chart here in the SPY and maybe just discuss that for a second.
Right. I think one of the reasons was actually looking at the overall market too. We didn't have any real strength behind the market. We didn't feel like we saw a lot of the sectors had not gone through the previous day's high. The financials were all inside. Most of the energy was inside. We had very, very few strong sectors. I think the airlines were the only strong sector that we could find. So when the market's pushing higher than the individual stocks, so it gives you a little pause that, okay, there's not as much strength behind the market as it might appear. I think a lot of even the tech like Google L and Amazon were inside. And we had a couple of things that were weak, like Netflix. So that's why I think that was one of the reasons why we really were also, and we were going to come up to, actually, as the day unfolded, and 198, I don't know if everybody remembers, but 198 was a significant support in the market when we were coming down.
Yep.
So it wasn't unusual that we would have, get that extra dollar move up to 198 and it come down from there.
Yeah, we had sold off over here. 198 was the target, so that's actually correct there. So yes, so we didn't feel that the market was as strong as the close and the gap higher. A lot of the high beta stocks weren't as strong. Oil and gas were not as strong either, despite what the way the market traded, and the financials really weren't as strong either. Even though they all traded higher, they didn't have that extra push behind them. So all of those reasons led to, if we opened higher, we kind of felt that this move off of here up to here, which would now be 3 days of trading, was kind of exhausting itself. So we weren't looking to be a buyer on a higher opening. We did push higher, but we felt that the reward potential on that push higher was a little bit diminished. So just always want to make sure we give context to this. Right. We never want to just say because. I mean, that's nobody's going to learn if we just keep saying because, right?
And I think we wouldn't have blindly shorted, but you also, as the day unfolded, you saw the financials, which were trading at the highs at one point, start to fall apart. You saw the energy start to fall apart, the tech stocks start to fall apart. So when the individual sectors started falling apart, that added the conviction that this market is not going to go any further.
Okay, so we'll take a look at some of the stocks that we were looking at coming into the day. We had some stocks to buy, and then we have that other list that we normally watch. We look to see what the SPY did the day before. In this case here, the day before and the second, the SPY was positive. So we look for stocks that showed weakness when the market was positive, and it gave us a small list there. And as you had just mentioned there, Marion, the airlines were some of the stronger stocks, and as we've been watching the athletic apparel. So we'll take a look at those stocks and see how they played out today. Again, just so everybody knows, this is a 10-minute intraday chart. This is a daily chart with the 20 period and a 50 period moving average. It's the 20 exponential and a simple 50. So Lulu, we had made very clear this morning in the pre-market meeting. It is trading well over the last, let's call it the last 10 days. Did have resistance up here, so no shock that 67 came in as resistance here in the first push during the day. Also, another good reason to look at multiple time frames. It's traveled a lot over the last 10 days, and it had resistance here. So if you did not look at multiple time frames, you probably would not have been prepared for this to reverse as hard as it did. Again, not a strong stock. I want to make that clear. It's a stock that's been trading strong lately. And we were waiting. It's not really meaning anything until we get through here, significant-wise, if you look at the whole year. But it's a part of these other stocks that we've been watching, the Under Armour, Nike, and Foot Locker. So just to give a little context to how Lulu actually ended up getting into that list for me this morning anyway. Then we have TJ Maxx, which, again, there's a lot of stocks that are not even close to trading above the 20-period moving average, nor are they rising. TJ Maxx was very strong prior to the collapse. So you can see that was in the list again today. And very quick move of $1 right out of the gate, and then petered out as the rest of the market did as well. And just from an entry perspective, whether you watch the 5 or the 10 in the 10-minute charts at the beginning of the day, this 10-minute chart gave you a really clean entry as a breakout of that first candle above the open. So played out pretty good there. Next, we were looking at Home Depot, which was relatively strong out of the gate too, just didn't follow through, maybe because of the higher opening, but still showing some good relative strength out of the gate as well. UA, you could see yesterday closed very strong, and today we got a higher opening and just didn't have enough. The market just dragged everything down at a certain point where there really wasn't that much follow through. But again, it's not so much how they followed through as much as us discussing why they were in the list in the first place, because that's really where everybody learns how to create a good game plan. All the money's made in the game plan. When the market's open, you should just be relaxed and executing your plan if you did a good job. Let's see. So Foot Locker, FL. Sticking with that same sector. But the ones that actually did pay a little bit today right out of the gate was the airline stocks. ALK had a good push and reverse, but as soon as it got right back above the open, it had another good dollar push, and then JetBlue. So you can see, I think the point that I'm trying to make here, Marion, is even the stocks that we liked long and strong today, they reached a point where they've traveled enough over the last few days. And that was actually, I guess that's kind of supporting why we didn't want to be long to push higher today.
Right. We saw and we had a couple of stocks that had follow through, but it wasn't about, we call L Brands, LB, a retailer. It had follow through. It did give up almost half of its gains, but we're even above 50% retracement there from the high today.
Nice move in the first 90 minutes, though.
Yeah, but the first 90 minutes. But then once it got, I mean, we didn't get much more than an hour and a half till everything seemed totally exhausted. Volume dried up. And then CVC also had followed through. We called it out in the morning meeting.
So once it's above the open, it's definitely something that we're going to keep an eye on. And then here's an inside candle that didn't trigger. You could have got in on this hammer type candle here, and they got a nice follow through. And again, I just want to make it clear, we're not picking stocks out of the blue. You can go to the website and dig in and see the most recent. You'll see they say what the date is on there. Marion's normally says morning news. Mine normally has the date, so they're very easy to recognize. So we don't want you to think that we're just picking stocks out of nowhere that happen to go up today. You can go and take a look at everything we had in the game plan today and see how they played out.
Or if you come to our 8 o'clock meeting, you can hear us tell you which ones we think are going to play out for the day.
Very, very important, because it's one thing to have the list. It's another thing to have discussions about how to trade. And let's just talk about the the call for the open, Marion. You know, you can have a list of 20 stocks from the blog that, okay, this is in the long list, you know, for argument's sake. But if you aren't privy to the conversation that we have at the 8 o'clock meeting, where we're saying, okay, these are longs, but they're better longs if the first print off the open is lower because the reward potential changes for the better. You missed that. So the 8 o'clock meeting is very important to give context to the list itself. That's a good point. Thank you. So the other stocks that we were just looking at, stocks that were weak with the market being strong. So we'll just take a look at those real quick to show you why they were in the list.
And these were on the list on the short side.
Correct. Yep. Correct. All right, so you can see over here, let me zoom this out just a little bit. So the market yesterday was strong and Sina closed below the open. So we were looking for follow through in that stock today, and we got it right out of the gate, but then the market caught a bid. Again, that's not what unfolded. We can't do anything about. We can only do set up good trading opportunities. And you can see it traded lower right out of the gate, but then just bounced back with the rest of the market. But here's why we're doing this. I'm going to say this every day. You have an idea of what the market's going to do during the day. It's good trading to have. Again, I'm talking my hands here like I got a crowd. It's good trading to have ideas on both of the market. Even if the market doesn't turn around, you're prepared. You know, there's that old saying, I'd rather be prepared for an opportunity that never comes than not be prepared when it does. So what we try and do with the 8 o'clock meeting is go through all of these on both sides, set up the both scenarios of if the market's strong, these are the first ones. If the market's weak, you would turn to these first. So that's kind of the list that we're looking at right now.
And I think it does work because a day like today was a perfect example. The market looked so strong before the opening. Most people wanted to look at all longs. Well, we had a lot of short setups, and they probably, I don't know about Pete, but I made most of my money on the short side today.
Yeah. Well, we were in the live trading room at 9:30. I did not see any really good longs that I was like, oh wow, maybe the airline stocks, you know, maybe ALK, but it pulled back so hard that I was like, all right, that shouldn't happen, where it just pulled back almost $1. So I kind of even stayed away from that. I had a little bit more of a short bias looking for those pushes off the open. I'm very big with reading the tape and how much the stock moved over the last 3 to 5 days, that kind of thing. And the long went higher than I expected today, but I wasn't comfortable getting long.
Right.
So let's see. LM was another one. Again, we're getting back to the list of these guys here that were weak yesterday with the strong market. So LM closed yesterday weak, and today it actually opened flat and pushed higher. So again, actually, you know, it's actually a good point here too, Mary. If you expect to be short the stock and it goes higher, let it go. You don't have to keep, you know, let it go if it's not doing what you expected it to do. You don't have to trade it short just because it was in your list if it's not doing what you expect it to do, which brings back to the point, you should have an expectation, because if it's unfolding, great. If it's not unfolding, that's awesome that you could recognize it because you had a context for what you expected it to do.
Right. Let's say you have 20 stocks. It's okay if 15 of them don't work out because you've got 5 that are working out. Let the ones go. First of all, they're taking up your time, your energy, your attention. Just concentrate on the ones that are working and doing what you thought they should be doing.
Yep. It always comes back. The conversation always comes back. Well, what if they don't do it? Who cares if the 8 didn't do? If you get 2 that do exactly what you expect them to do in the first 90 minutes, make money. You're prepared. You earned it. Go make money. Don't worry about the other 8. Great point. I'm fired up.
We had a lot more bearish ideas than we had.
Yep. Again, as you can see, and this is actually not even the whole list, but just to give everybody an idea of how big the actual list was. I think the same stock that was the best trader on the board today did its best to get through that $100 level, but just for whatever reason well, not for whatever reason, we know it's breaking 100 is a big deal.
Netflix is probably the best, easiest trade of the day.
Yep. For whatever reason, it just has not been able to get through 100. It keeps flirting with it, and now it actually closed near the lower end of the day again. Look, I mean, tomorrow's going to be interesting to see if it gets below there. Whether you use this level here, which was the Chinese story, monster gap down day. I don't know. You might not use that, Mary, because it's kind of.
Yeah, I don't. You know what? I think that was kind of an anomaly. I just think we have a lot of support here, both technically and also psychologically. That 100. And the thing about Netflix is it was weak right out of the gate. Even when the market caught a bid, it didn't catch a bid.
Right. Exactly. So essentially, here we're looking at good support is where buyers did something significant last
Right.
time. That's how we define it, and that's this area here. So we're looking really just below 94, just below 95. So like, oh, it's actually 93.48. So right in that area, about 93 and a half. So if it breaks 100, you got some room to go there, and that's a big
Oh,
part of the conversation with us every day too. How
right.
much room to go does it have?
But also recognize where your levels are, because if that starts going down, it could find support and really bounce off that support. So, don't be a hero and try to do something at the level. Know where your support is, know where your resistance is.
Yep. So now you have a discussion with do you short sell it the first time it gets to 100, which actually it's kind of trading right around there, and actually it's right around 150 right now, $100.50. Because it keeps bouncing off that level, it's probably a little bit wiser to be a little more conservative. Maybe wait for the first 10-minute close below 100, as opposed to the first time it gets through there and you get these whippy type actions against you. It moves $4 against you because there wasn't any confirmation. So if it does get down to that level, what's the market doing? What are the market internals doing? Is there good volume pushing down? If all of those things are in your favor, maybe you can get a little more aggressive on how soon you enter if it breaks 100. If none of those things are in the equation, then you definitely want to be a little more conservative. And by conservative, I mean just at least let it close below there. Don't have a sell shortstop, and as soon as it gets to $99.95, you put the short on. Let it get through there a little bit. So you have to weigh the other factors that are going on to dictate your conviction level for how soon you get in a breakout or a breakdown. So I guess we'll finish up, Mary, and just take a look at the energy stocks and financials to give them a little bit of perspective for tomorrow. CVX, almost 3 inside days in a row. Pretty close there, but let's just call it a 3-day consolidation. So out of multiple consolidation days come expansion and volatility, which means we'd be looking forward to a trend type day, but not calling a direction. So CVX, we're looking for a trend tomorrow, but not calling which direction. Now, just looking at the chart, you would expect it to be down, but the fact that it's consolidated for 3, maybe 4 days right now, I mean, actually, you can even make a case that it's a 5-day trading range, really.
Right.
Just look for an expansion and volatility. If you get intraday continuation patterns, don't call direction. Just call out of this breakout, don't call direction. But if you get direction intraday, if it's above the open, if it starts to give you nice flags intraday, then you could trade in that direction regardless of the trend there, the longer term trend. And then we have Goldman Sachs, another doji type candle, and this one actually closed near the lows. You've been saying it all week, Marion, how weak this area is right now. I think we all agree that there is a lot of people just waiting to see what's going to happen with interest rates. So you could kind of understand why there's indecision here.
Yeah, all those wicks are really telling you there's a lot of indecision there. Buyers, sellers, they're all fighting each other.
So that's what we got for tomorrow. I guess if we take a quick look at the end of day charts today and maybe make an early bird call on tomorrow, we kind of got the selling that we were anticipating. It, as you said, it went from 197 to 198, so it went a dollar further than we expected. But then we did get the selling, and we also did get the VXX rising. So I am looking for a lower opening tomorrow and a lower push down, as we called 2 days ago. The only question is, hopefully we get a flat opening and a push down and not a big gap lower if we do go lower and have all the intraday moves sucked out of the pre-market.
Right, because tomorrow's the Friday going into a 3-day weekend. People want to be flat. Now, if everybody's short going into it, they're going to buy them back in. If they're long, then they're going to sell them. So it really, you got to keep an eye on the market. It doesn't always go down before a 3-day weekend. If people are short, the market will find a bid because the people will be covering their shorts.
Yep, and if I could just bring up one last point, especially if anybody's a relatively new trader, just be careful tomorrow with your volume. I can tell you flat out, there will not be a lot of experienced traders trading after 11:30, 12 o'clock tomorrow, about 2 hours after the market opens. So if you start to see a stock, normally, again, just for argument's sake, does 100 million shares a day, and it's 10:30, 11:30 in the morning, and it's got 3 million shares traded for the day, just be aware that there's a good chance that volume is going to get a little bit lighter tomorrow, or whippy, with a lot of people getting out of trades, getting flat, that kind of thing. It can be a day that could ruin your weekend if you're not conscious of whether or not it's a good day to trade or not. And if you start to put on trades and they're bouncing all over the place, get flat, and it's just not worth it on a day into a long weekend like this. Especially China is off. We're heading into a 3-day weekend. There's a lot of stuff going on. You're better off just really enjoying your weekend. If you make some money in the morning, book it. Go buy some German potato salad and potato hot dog buns with, what do they call it? The potato buns. I love those ones.
Yeah.
But anyway, I think we're
Also, I just want to bring up tomorrow morning is non-farm payroll, so it's jobs data and unemployment rate, and that can really whip the market around as all the analysts get in there trying to weigh what this means. Does it mean we're getting higher interest rates? Does it mean that interest rate is going up is off the table? So during the morning, they'll start weighing in on that, and so you might get a lot of really whippy action. So just be really careful.
Yep, very good, very good. Actually, did not think about that. Usually talk about that in the morning, but a good way to prep everybody for tomorrow.
Yeah, so
all right, so if you enjoy this kind of stuff, this is what we do every day from 8 a.m. to noon. So join us in one of those rooms. You got a choice of 2 different rooms. We will see you then. Marion, have a great night. We'll see you tomorrow.
Okay, you too. Bye, Pete.
Bye-bye.
Bye, guys.